Hello and welcome to The Point. I'm Lalit Mathur, co-founder of DCirrus and a corporate lawyer. This podcast brings you candid conversation with leaders in law, finance, consulting, and business. We will explore their journeys, challenges, deals, teams, and lessons learned, sharing real stories and practical insights. The idea is simple: to inspire and guide young professionals, industry experts, and students by sharing forward looking perspective from those shaping the future of our industries. It's all about honest, insightful, and engaging discussions that get straight to the point. Today, we have someone who truly knows how capital moves and, more importantly, how it creates impact. Tushar Kansal, founder and CEO of Kansaltancy Ventures, a powerhouse in venture capital, SME IPOs, debt, and strategic finance, join us. Tushar has worked with 1,700 plus global investors, helped companies raise anywhere from $300,000 to $50 million, and is closely associated with the largest anchor investor in India's SME IPO ecosystem. Safe to say, if you want to understand how funding really works beyond the headlines, you are in the right room today. Welcome to the show, Tushar.
Thank you for having me, Lalitji. It's really a pleasure to be talking to you today.
Thanks, Tushar, for joining us today. So, Tushar, before we talk about capital, IPO, scale, business, I want to start with the foundations because every long journey usually begins much earlier than people realize. So, you come from a strong academic background. You have a BTech, you have MBA in finance, and then later you did leadership studies at Harvard. So in your early years, did you always see yourself in finance and capital market, or did that clarity come later?
Well, I was fortunate that I used to read a lot. Like so, at that time there was no internet. I'm talking about 1990, 91. Uh, but the newspapers, they used to tell that the Indian economy opened up in 91, and then there were a lot of things about liberalization, and in the 90s the technology revolution was going on. Computers were introduced for the first time in India in late 1980s when I was in school. So I was lucky that I could get a very strong sense from my daily reading of 3 hours that the world is run by either technology people or finance people, and I understood that either you are on the cutting edge of technology or you are managing the money. So, so that led me to my father is IIT Delhi 71 batch. So, I used to take my coaching from Vidya Mandir, which had just started at that time. Brij Mohan Gupta ji, Manmohan Gupta ji, Shyam Mohan Gupta ji, and then I was preparing for engineering, and my rank in this particular college, TIT Bhiwani, which is a Birla's college, it was 62, and on 61
Oh,
computers closed. So
okay.
I got, there were only computers and textiles in the college. So I got textiles. So I missed being on the technology side by one rank. And but I made up for it because after my engineering, I did MBA finance from University of Delhi. And although I had got admission in many other colleges, but I chose MBA finance from University of Delhi. That is how I entered finance.
Great. I think this Tits Bhivani, I remember when I also used to, I write one exam for Tits Bhivani during I'm a science, I did my science in 12th, but I was not lucky and I was not, I had not any rank at all. So
No, it was, yeah.
when you say you did your MBA finance from Delhi University, is it from FMS?
It is from South Campus, Master of Finance and Control. It was a very, very comprehensive MBA. it was primarily MCom plus MBA. So there were eight
Oh,
subjects in each semester. So it was a dual. All
degree.
the faculty was from MCom actually,
Okay,
and yeah.
perfect, perfect.
But I was
So,
coming from engineering, and all my classmates were gold medalists, SRCC, CA topper. Everybody was deep into commerce, and for me, coming from engineering, it was the first time I was ever studying accounts, and so it was really not easy for me.
yeah, but you nailed it. At the end, you nailed it. Don't worry. So Tushar, growing up, what did success look like to you before you entered the professional world?
Well, I had a very faint idea. Always used to imagine that because my father did IIT and then he created so many buildings, and he was a civil engineer and he created 50-story buildings, and he used to do all those things. So I had a very faint idea that probably once I get into working life, I will travel a lot, I will earn a lot, I will have huge farmhouses, and it was always about it was always about high standard of living, uh, and I never planned that whether I'll be in corporate life or job life, and what happened was that after my MBA, instead of joining a job, and there were many jobs available for us on campus, but I chose to join my father's new business, which was in IIT coaching itself. And
Okay.
because I thought that earn your own money. Uh,
Mm-hmm.
but but fact of the matter was that you should always learn big things and then do entrepreneurship. This is my firm belief, and so it was a very small business, and hardly there was any exposure, and I didn't have exposure how to grow the business. Like, how can I make it 20 centers? Although I made three centers in 5 years and 800 students, and made many mistakes, and spent like I spent a lot on advertising and marketing. And so I made all those mistakes, but finally, once I sold that institute to Narayana Institute of which had come into North Delhi. Then later on, I decided that I should have some exposure to high street finance, to how companies work, how big companies work, and that is how my corporate life started. So, so success meant initially money, but later on it meant that you have to equip yourself to be on higher platforms and take larger responsibilities. So the meaning kept on changing.
But growing from zero to those three center is also an uphill
And
task. And when
yeah,
you sold that business to somebody, I mean, this is again the hustle of a startup founder, or doing trying to do all his best to run and scale the business. Okay, that's
yeah,
that's impressive, Tushar. So,
thank you.
although you talk about your father, I know, but was there a person, a teacher, family member? I know you talking about your father who can be a mentor, or any early mentor who first nudged you toward thinking big.
Well, they were people who came to me at different stages, and I was like, I used to speak a lot. I was very jolly. I used to crack jokes all the time, and so there was a teacher in school, the English teacher, ma'am Sasmita Satpathy, and
Uh-huh.
she told me one day, Tushar, although many people will try to curb your tendency of being lighthearted and speaking your mind out, but don't curb it. And she gave me confidence that be yourself. And if at that age you get that kind of a validation, it really meant a lot. And for the next 2 3 years, I felt very confident in school because of her support. And when I was doing engineering coaching, then Vidya Mandir had just started, and the way these three brothers used to teach, it was like I have never studied like that. With they used to complete a chapter uh, of 11th and 12th, one particular chapter in 4 hours, and anything you ever wanted to learn about that chapter from an IIT JEE perspective was those 4 hours. It was like
Wow.
that. And I was like, I've never studied this kind of I've never had this kind of teaching experience. You never experienced this.
This type
Similarly,
of teaching.
I got placed on campus in textile engineering in Indorama Synthetics Nagpur, and they wanted
Mhm.
to open a MBA college. So they had hired a director who was an academician, Mr. SR Singhvi.
Okay.
And although we were supposed to handle manufacturing, but Mr. Singhvi did a 15 days induction program for us. And in those 15 days, the things he taught us, the practical side of management, it was I many years down the line, I called him, I found his number, and I told him that, sir, that time, those 15 days I can never forget. So
Wow.
in life you meet these kind of people, right? So when I was studying for MBA coaching, then I was taking a coaching from Career Launcher, and Career Launcher had just
Hmm.
started at that time.
Hmm.
So the
Mhm.
founders themselves used to teach.
Okay.
So I studied from Satya and Shivku, and again, coming from engineering, and then suddenly you find such great personalities teaching you, a lot of amazing. And when I was in Deloitte after coaching, I joined Deloitte. I was very lucky that I got through Deloitte and Touche, and a big four company taking me in spite of my 6 years business experience. And then there was a guy called Suraj Kalra, and he taught me high street finance. So, on the sheet, how you can create magic, and amazing finance skills. And so, these people like Vijay Deep Singh was
Wonderful.
another person in Deloitte who he's a partner now in a company. And I learned, like in consultancy
A lot.
ventures, like I've met so many amazing VCs and so many colleagues, which it's amazing.
Perfect. Perfect. I think that early ambition eventually met the real world and for you. That
Yeah.
happened inside some very demanding professional environments. I understand that. So you mentioned your early exposure, including this big four consulting you just touched upon Deloitte. What was your journey there? And what was the biggest culture shock you experienced when you first entered that environment?
Lalitji, it is just the way you look at companies. Like, if you look at a company and you say that, oh wow, this company has created this product, and it is available everywhere, and everyone is using it. But when you are in a big four, you judge the company by its numbers. So everything was about numbers. Everything. What are their financials? What are the ratios? What is the valuation? Uh, what are the cash flows? Till how long can it sustain? They used to catch the bull by its horn, like just see the numbers and then decide what this company is doing is worth it or not. It is beyond the marketing, it is beyond the brand, it is hardcore achievement, financial achievement. And because the whole atmosphere in the company was like, I mean, it's like talking numbers 12 hours a day. And
Wow.
and it very high pressure environment. I was very super sincere kind of person. So, okay, new due diligence assignment is coming. Even if Tushar is not a CA, put him in that. So, valuation is coming. Financial model needs to be made. A private equity Sri Lankan telecom deal is coming. M&A, mergers and acquisition, put Tushar in that. I was in 7 to 8 teams at one point, and I used to reach home at 12 o'clock in the night, and then also was working on a model sitting on the table. So it was very like amazing. Like,
That's
probably in,
that's
yeah.
that's quite that's quite interesting. That's quite interesting to know that. putting you in all the teams, and
Yeah.
that too from a team who is known for their audit and all that type of stuff. And you are not a CA, by the way, right?
Yeah,
So
I
you are a
mean,
finance guy.
yeah, because I used to uh, believe a lot in quality reports. So I used to
Hmm.
make them perfect. And that is why later on, by 2011, I got a offer from KPMG in Dubai, 80 lakhs package. And Singapore bank gave me an offer letter to shift to Singapore, because hardly in 3 to 4 years of corporate life, because my learning curve was amazing, because I really used to hustle a lot.
Perfect, perfect. And all in during this journey, did you ever feel out of place intellectually, socially, or financially? How and if yes, how did you navigated that phase when you were working 12 hours, 18 hours a day? I mean, how was the days going? I mean, you can't sustain every day for so many hours and burn yourself. How you were navigating that phase must be a very hard phase.
Yeah, it was a very hard phase. I had to wear spectacles at that time. I was hardly
Mm.
I was hardly 30 years of age, and for the first time in my life, because I was sitting so much on laptop, my eyes became weak. And uh, first time ever I felt out of place was frankly when I joined TITS Bhiwani.
Okay.
Bhiwani is a border town between Haryana and Rajasthan. It is a
Mm.
practically a very dry and desert kind of area. So imagine coming from Delhi to a rural place, uh, hinterland kind of place, and there was one restaurant in the whole of city of Bhiwani, and
Oh, okay.
it was like getting transported to 200 years back. Uh, it's like a totally different life. I mean, we used to play sports all day. We used to, uh, I mean, there was so much time there with people like you can't even, it was for a Delhi person, it was very, very different
Very,
kind
very
of
difficult.
place. Yeah. And
Perfect. So,
then
yes,
from
yes.
engineering to MBA, coming from engineering to MCOM plus MBA kind of course, it was again very, very difficult. And
A
then,
big paradigm
yeah.
change.
And then from Deloitte, Times of India's venture arm, private treaties, it was called. Now it is called Brand Capital. They poached me at double salary from Deloitte. And when I joined, then I learned that there is nothing about finance in this company. It is all about media. And, uh,
Okay.
you know, yeah, they used to think about every company or client in terms of how much advertising we can get from them. And relationship was everything, and finance hardly mattered to them. And like, so for me, it was a culture shock going there.
I understand that. So, Tusharji, before working with these billion-dollar balance sheets and financial statements, was there a time when taking a personal or professional risk felt genuinely uncomfortable?
Yeah, before 2008, 3 years before 2008, the global economy was booming. You will be surprised to hear that I did my MBA in 2001, and my classmates, they were already sitting on a salary of 50 lakhs by 2005.
Oh,
Like,
okay.
I mean, the global financial economy was booming, and that led to the 2008 crisis, because
Hmm.
there was over exuberance. So for me, missing that bus and being in a business was one thing which my wife was my classmate in MBA. So she used to tell me, you are missing the financial bus. Everybody is going
Hmm.
places, because she was in SBI Capital and she was doing great. So that was a risk which I took. And one thing, unique thing about my corporate life was that in my the 5 companies where I worked in a separate finance vertical in all the five. So whenever,
Hmm.
like in Deloitte, I was a consultant. So when I joined Brand Capital, I was on the buy side. I was an investor. Then I joined Aircel Treasury. I was in operations, treasury operations. Then I joined MTS. I was looking after debt and corporate finance. And finally, I was CFO. I was reporting to a private equity fund, Guggenheim Partners, and I was managing accounts and auditing also. So for me, it was
Yeah,
uncomfortable in all the
juggling.
places.
You are
Yeah,
juggling all. You are a great juggler, I would say. You are juggling from one role to another,
yeah,
and the best part is that you are still able to do justification to all those roles.
yeah,
That's the best part of it. I think
yeah,
I'm sure the early years of your education, from engineering to finance to all those things. I mean, those are the foundation stone
yeah,
which help you a lot. So now since we are
definitely.
talking about risk, when you look back, which early experience most sharpened your risk assessment instinct, and how do you consider and evaluate risk in a business?
See, if you are running a small business, if your skills are complementary to the business you are running, then you have a core competence, and that will mean that you will, sorry, yeah, that
No,
means
it's okay.
that that means that you can sustain the business even if you have to run it totally frugally, like, without staff and you are doing everything yourself. But because it is your core skill, so, when I was in IIT coaching, I had head of departments from Delhi College of Engineering. And once they became old, I had a huge problem. So for me, the risk was take fresh people, because in my market, four new entrants had come. Fitji had come, Akash had come, Narayana Institute had come, and Shri Chaitanya had come. So either invest fresh money, take new people, fight it out. But it was so difficult to fight with players who had 50 to 100 centers. And
Hmm,
because they used, their results of IIT used to come from 50 centers, and they
correct.
were paying teachers, one teacher they took at 3 lakhs a month. He was teaching 12 hours a day in four centers. My teacher was
Oh,
teaching in only three centers. So,
hmm.
and what they start to do was to attract intelligent students and create a special batch for them. They they took those students for free, that we you don't need to pay any fee. So all the
Just
brightest,
for the
yeah,
branding part of the.
yeah.
Hmm,
So,
hmm, hmm.
so how to compete? So, there was a point when I said, okay, Narayana is offering me a good crores, some good crores at that time. It was very good money. So I said just, and I used to own the three real estate in the three centers. So for
Okay.
me, the real estate was mine, and I was just transferring the students and still getting good crores. So I said, okay,
Okay.
just like, for me, risk was, at that time, risk was like that. And uh, just a minute.
Yeah, yeah, go ahead, go ahead. Please
Yeah.
continue.
And then later on, when I was in private treaties, Times of India, then they used to think in media terms. They never thought in terms of finance. So for me, I was signing on investment reports, whether you need
Okay.
to whether you need to invest in a particular company or not. I used to sign on that. So for me, it was very difficult, like how to make these people understand that the valuation at which you are entering is not right.
Hmm,
So
hmm.
those things were there, and later on when I was in Aircel, it was a politically influenced company. Uh, so the finance minister of that time, he was directly involved, and I was a signatory of up to 100 crores. I was an authorized signatory of up to 100 crores. So again, imagine the risk that your uh, treasury is politically loaded, and you are there as a signatory of 100 crores. So God knows what kind
It
of things you are.
happens.
Yeah.
Hmm.
So risk.
Signing.
Yeah. And then MTS, the Russian company, out of 11 telecom companies, MTS was the last in terms of financial performance. It had accumulated losses of 11,000 crore. So
Wow.
At that time, I took $2.5 billion of debt from 12 banks. So the banks used to tell me, भैया ये पैसा वापस आएगा भी या नहीं.
वापस आ गया.
So, so those, risk was everywhere. Like whatever you do, risk is inherent
It's
in whatever you do. Yeah.
so just the second part of question, if I may ask you. So you see now today a lot of the culture is like there are a lot of startups coming up, there are a lot of mid-sized business come, there are a lot of MSME coming up. The people are more prone to taking risks and going out of their regular jobs, setting up new businesses. So for those people, I mean, if to start a business, I mean, any business can be a trading business, software business. I mean, if I would say, Tusharji, if you put a risk as also one of their checklists, what do you think that they should think logically? Because not everybody is from finance, not everybody is a techie. So there are people who are very from sales. They don't have any finance knowledge, they don't have tech knowledge, but they still want to venture their startup. But so what is your thought on that risk? Because that's a very, I would say it's a very vast topic. You can't jot it down in simple words. But what's your basic thoughts of calculating that risk when somebody's enter into a new business?
Lalitji, you have to know whether the sector in which you are entering, it has some headwinds, tailwinds, tailwinds which will help you and headwinds which will obstruct you. Like
Correct.
if you are today entering a quick commerce sector, it is hugely money guzzling. So the four companies who are in the sector, you can just nowadays knowledge is democratized. It is available on the click of a button. So just check how much they are burning. And if they are burning 1,000 crore per year, 2,000 crore, 400 crore, you instinctively get to know that if you open a small quick commerce business, you will end up very bad. So
Hmm.
basically, you have to understand one thing which successful founders uh, I always find in them is that they are delusional. They have a over confidence in their abilities, and hence they make it because they don't bother too much about risk. They don't bother too much about the all the negative news, and they don't ask their family too much whether they should do it or not. They just do it. And because they started doing something, but because they were positive and analytical, and maybe they changed the business plan or they pivoted, and so they had all those hustling traits. So maybe instead of 1,000 crore business, they ended up with 50 crore business, but they still had a
Hmm.
happy life.
Happy life.
Yeah.
Hmm.
So business can be made in all the things, but there is
Hmm.
a method to the madness, and uh, you don't have to make mistakes with other people are making. And
Hmm.
demo, information is democratized and everything is available on the click of a button. So it is easy to find out what is really happening in the work which you want to do.
Perfect. I think that's a good piece of advice and a good conclusion that most of these startup founders are
Yeah.
delusional. क्योंकि वो एक,
Yeah.
I think I remember there was a movie by Amitabh Bachchan and he Khuda Gawah and there was a dialogue by Amitabh Bachchan that if you think too much you will not make a decision, right? So too much thinking
One
actually won't allow
one
you to take
action,
any strong decision.
one action has more value than 10 hours of thought.
Uh, I- very good, very well crafted. So now let us move forward. So leaving your structured, high-profile roles, I would say the juggling roles, to build consultancy ventures. Was that a gradual pull or it was a sudden push?
Well, there are two things to it. One, I used to drive myself to office from North Delhi to Gurgaon. It used to take me
Uh-huh.
2 hours in the morning and almost 2.5 hours in the evening. And for 7 years, I was on the road for 4 hours every day. And uh, I did not shift to Gurgaon because my kids were being handled by my parents, and my wife's office was in Connaught Place, which was hardly 9 kilometers, 10 kilometers from my house. And so, but my life was hell because those were pre-COVID days. So nobody used to tell you work from home. Even if you don't have
Mm.
work from office, no problem, you can work from home. It was only in the Russian telecom company where my CFO, Mr. Sergei Savchenko and Ilya Kosulapov, they used to love me so much that they said, Tushar, don't bother. Come or don't come, doesn't matter. And so, that kind of a thing, that was one thing. And second thing was um, I had learned all aspects of finance. So I had learned debt, I had learned equity, investing, treasury, operations, auditing, how to report to private equity. And frankly, the best business I could find out from my experience was investing in brand capital. And I thought that, the whole global economy is geared in such a way that even if you do a decent kind of investment, you will end up making a very good return. And that is what led me to open Consultancy Ventures in 2016. And uh, I was so lucky because Modi ji came in 2014 and he launched Startup India, and he also started, the government also started focusing on investment in startups. And I had launched, in 2016. At that time there were only 432 startups registered with Startup India, and today, just last month, the government celebrated that there were more than 200,000.
Wow.
So
Oh,
I
yeah, I heard that.
practically, we have played a huge pivotal role in the growth of this sector. I have done more than 1,000 talks, panel discussions, judging sessions. I have done 51 shows for Venture Capital TV. Uh, like, we have been totally in this journey, and it has been truly fulfilling.
No, I think so. So it was not sudden. It was gradual shift, and good. I mean, I've uh, creating so much of content and sharing so much of knowledge. I'm sure there are a lot of good omens which you have. So coming back to your consultancy. So in the early days of consultancy ventures, what was harder than you expected? Whether it was the credibility, the deal flow, or trust building.
Lalitji, deal flow was never a problem because I did 51 shows
Mm.
for Venture Capital TV. I used to be called to CNN News 18. I did 16 articles for Business World Disrupt. And I was always on social media all the time, and people used to call me. Even today, I get so many invites from, like, I was a judge in Shark Tank at IIT Delhi and IIT Bombay. And so, deal flow was never a challenge. Trust, people really trusted me because I spoke on the face, I spoke the facts. I never, I honestly, and I always had good information because I read a lot. So, credibility got built easily, but definitely credibility was the last because it took time to build. And, as people saw that this company has a lot of best practices and a very transparent approach. The real problem was actually that the whole ecosystem of investment was very weak and people had no knowledge. And what investors were doing was that they were spraying and praying, that you just put money in five startups and then you start praying that somehow some investment will work. And one persistent problem which has been there in the Indian investment and startup ecosystem is the lack of late stage investments. So startups get initial rounds, first round, seed, pre-series A, series A. Then, from series C onwards, hardly few players, like one SoftBank, one Sequoia, one Lightspeed. So, the late stage investing is an issue which got solved to some extent because the government opened up the IPOs for SMEs and
Mm.
for loss-making startups. So some solution came, and that money got released because a lot of exits were given to these VC guys, and then they invested more in fresh startups. So definitely some solution has come there.
Okay. So do you want to impress more upon this idea of getting funded, then going forward to Series A, Series B, and then stuck somewhere in this Series C? Would you want to share some more details in this? Because I think the user of or the podcast which we are showing, there are a lot of co-founders and founders see this. I mean, if you can you share some thoughts on that?
See, profit and loss of any company has a journey that you will put money, you will create a product, you will have an office, you will have teams, you will pay salaries, and then you will find distributors, or you will open your own website and sell through that. So you will be a D2C company. Uh, then you'll need to pay for digital marketing, performance marketing on Instagram and SEO, and nowadays you have to advertise on Amazon and Flipkart also. So on Meesho and Myntra, and now quick commerce is selling everything. So you have to advertise on Blinkit, Zepto. So all this profit and loss thing, it has a sense to it. It has a method to the madness that naturally initially the losses will be there because you are putting money, and at some point your operating profit comes. So it becomes positive. For the first time, the business starts throwing profits on an operating basis. And then once the revenue increases quite a lot, and once you are managing the business model in such a way that there are profits, so the profit and loss becomes really good, and the valuation of the company really becomes good. But in many cases, you can't do the whole magic in a short period of time with your own money. You need external money, because if you don't uh, grab the opportunity, then somebody else will, by using external money. And then it comes to the whole dynamics of the balance sheet, how to find external investors, how to keep on finding them, how to grow the valuation of the company so that whatever previous investors are there, they feel confident and they also bring fresh investors. It is a full-time job. Just like running a business is a full-time job, fundraising and managing the investors and managing the valuation is a full-time job. There are founders in the very, very famous founders in the startup ecosystem whose primary skill is not running the business. Their primary skill is fundraising, like Unacademy, like Byju's, like so many companies who never made profits, but they knew how to raise funding. So if you want to latch on to the bandwagon of fundraising, you have to, uh, in a sense, uh, always provide tangible returns and benefits to investors all the time. That if you put in 50 crores in this round, I will ensure that in the next 18 months, our valuation is 3 times more in the next round. And, uh, in the next 2 rounds, I will ensure that I will also offer you an exit with minimum 35% internal rate of return. So if you can talk in this language, uh, it is like a it's like marketing all the time. And
mm.
it's like, and in between you have to also, because these guys control a large part of the company, so their yes is required in case you also want some of your to sell some of your shares. So there you also have to tell them that I will get you this benefit, but allow me to sell 100 crore worth of my shares also in this particular round. And either you run your business or you do fundraise. You can't do both. You have to
I think
have,
this is
yeah,
cool. Yeah, no, I agree. I completely agree with you. And this is a very and it's a chicken and egg story, okay, whether I should run my business, whether I go out, I give my business to somebody or put my business in some sort of auto mode and go out and meet the investor. Because one thing what I have learned in whatever small experience I have, investors wants to speak to the founder. They don't want to speak
yeah,
to a
yeah,
CEO, CFO. They just want their from the horse mouth with
yeah,
what benefit we will get when we are investing money in you. I mean, but I'm sure the founders will find a way to do justice to the business, because if the business is not there, the funding is not there for sure, right?
yeah.
So
That's true.
perfect.
Yeah.
So let us come out and have some soft discussions. I mean, I think this was a good one. So if you could speak to your younger self during those early years, what misconception would you correct immediately?
Well, at the age of 50, my advice to young people and my experience, the biggest thing is that you have to learn the ability to see things how they are, not
Mm,
as per your perception. And
mm,
ultimately, we are not able to deal with the situation because of our own misconceptions and judgments which we create. Uh, it distorts reality. So I made a big mistake of changing too many jobs. Like if
mm.
I was in Deloitte and Touche and had not gone to Brand Capital, not gone to Aircel and further as a CFO of that Guggenheim Partners owned company, I will still be earning very well in Deloitte. Like, KPMG offered me 80 lakhs, probably Deloitte by 2012-13, Deloitte also would have been giving me
Same,
equal
yeah.
money. Yeah. So, changing jobs sometimes is not the right thing to do, and definitely not so many jobs. And
Mm.
but the good part was that every time I used to get so many good offers, like double salary, double salary. So I thought money, yaar, money le lo. So I shifted. But one thing is there, like if I speak to my younger self, then I will say that fools succeed in life because they are confident, and intelligent people don't succeed because they get too many doubts.
Yes,
So,
I agree 100% with you.
so, so take steps. Life will reward you. Life will reward you for your karmas, for your actions. And
Yes.
suddenly, unknown people from somewhere will come and align with you, join with you, uh, and also the from the financial perspective, the whole structure of global economy and the monetary system is geared towards money flowing into capital, money flowing into equity. And stock markets always boom because that's how the global economic system has been created by US and UK and these people. So competition is also overrated because if you are doing something well, then people will buy your stuff no matter whatever be the competition. And spiritually speaking, I will say surrender to God, Hanumanji, Vaheguru, have the strength of Bahubali, Hanumanji, follow the dharma of Shri Ram, follow the karma of Shri Krishna, and always be in gratitude.
That's a very good, I would say that's a very good suggestion to whoever is listening to this podcast. So moving forward, Zadi, how do those early struggles and learning moments influence how you now evaluate founders? You still help a lot of founders. So how now you evaluate founders who are still finding their footing?
Well, founders' actions, they speak louder than their words. The whole startup ecosystem is such that everybody talks quite a lot. And
Yeah.
there is so much of everybody starts giving you management gyan, and they will give market gyan, and they will give this Trump said this happened, this whatnot, whatever. So I love founders who are grounded in reality, and you know uh, the whole inherent nature of the startup journey is such a way that you feel like a king one day, and the next day you feel like a pauper. So it is a huge band. You are exuberance and then despair.
Mm,
So,
mm,
so I love founders who take pains to build knowledge in all areas, uh, jack of all, not, not try to be master of one or two skills. And those who demonstrate a partnership-driven approach with investors, that, this investor has been
mm,
with me for 3 years, 5 years, 8 years. So, uh, and acknowledging the risks, those founders who acknowledge risk, and the foremost is a founder who creates sustainable business model, good in unit economics and profitable. And I generally dislike those founders whose only skill is fundraising. They just know how to raise funds.
mm. And do you think today's founders face harder or easier early days compared to when you started?
Well, it is much harder because smartphone, AI, ChatGPT, Claude, Grok, Gemini 4, uh, all these have made knowledge democratized. So everybody can know what I got to know at the age of 50. And
Mm,
so, in that sense, it has become more difficult. But it has become easy also because nowadays there's so many tools. You can just get any CRM system for even for lesser price with less features. You can get any kind of tool you need. It is so easy to just grab a tool and build a process and build a team around it. And the one big negative point is that people, the youngsters, the Gen Z, their attention spans have gone for a toss
oh, yes.
because of 10 hours being on videos where, and information is coming to them at a click of a button. So their mind runs so fast that they start to take fast decisions as if everything will happen in 2 days. So
Mm,
AI is killing the value of a human skill. And just like social media killed your interpersonal skills, you started meeting
mm,
people less. Similarly,
yes.
AI is killing your IQ, and that is a negative. And capital is available more, uh, but funding takes time, so one has to be at it. So it is a mix of both things.
So, okay, so we are just shifting to the other side of the table. So tell me one habit or mindset that separate great capital allocators from average ones.
Well, calculated realism, uh,
Mm,
like seeing things as they are, and always knowing that for sure that the market is paying for this. So end of the day, there would be a way where they will pay for your product also in large quantity. So if you have that kind of optimism backed by research, uh, you know this mindset works wonders. And also remember that being a founder, running a company is very boring. You have to do all the boring things day in, day out, and same things, repeated things, uh, and say no to 90% of the things. People will try to grab your attention. They will want time from you. They will call you for here, for a talk, for a meeting. You have to say no to 95% of the things and yes to very few things. And so, one another mindset is a long-term horizon. Like build for the future. And as I said, it is difficult for today's Gen Z because their attention spans have gone for a toss. And lastly is emotional balance, like always believe in God, keep good health, go to a gym, take walks, go nature walks, give time to your own health, and believe in karma. If you do good things, end of the day, you will make it.
Perfect, perfect. Rajiv, now some very personal question. One book, one person, and one experience that deeply influenced your leadership style. Any
So,
book you want to share?
yeah, so I've read many books because I've been an avid reader of non-fiction. But there is a lady, ma'am, Mrs. Shubha Kulkarni, and
Hmm?
she learned Bhagavad Gita from Gorakhpur, Gita Press Gorakhpur. And
Hmm?
Gita Press told her, you have to pass this knowledge on further. So she used to take classes on Bhagavad Gita. She was director HR with Hewlett Packard, India. So she used to
Okay.
take classes for Bhagavad Gita, and I attended those classes for 2 years. And believe me, it is the divine song of life, Bhagavad Gita. Whatever you can possibly think about life, they have already captured it. And without the God dimension, bringing the God dimension in your life, many questions can never be answered. One more person I would like to name, and that is Rishi Sunak. I could never in my life, यूके का प्राइम मिनिस्टर हिंदू अपने आप को कहता है कि आई एम ओपनली हिंदू. इट इज
Hmm.
ऑसम. इट इज नेवर सीन दिस काइंड ऑफ थिंग फ्रॉम एनी इंडियन.
Leadership.
हाँ, वो अलग ही लेवल का है. मतलब वो प्राइम मिनिस्टर बन के
Hmm.
दिखा दिया. मतलब वो अमेजिंग.
Hmm.
एंड लास्ट
Amazing.
experience is when I was running my coaching, there was a office boy called Nikhil, super sincere. And one day, I used to expect so much from him because he was super sincere. And one day I found out that he committed suicide. And I could not, for 1 month I said, oh my God, I never knew he was so close to suicide because I assumed that he would have a normal life like all of us have. And later on, I found out he had family problems and he had many things. And that changed my perspective towards looking at people. Like, end of the day, I treat them as human, not like friends, family.
Change.
It
Hmm.
changed my whole perspective about life that, death is
Oh,
very much a possibility.
oh yes. This is very hard money. So now to close and so finally, what excites you most about the future of entrepreneurship in India and emerging market?
Uh, so, India, what excites me most is uh, that talent is coming back to India. Startups are flipping back to India, like Meesho, PhonePe, Flipkart. They changed their holding company from Singapore to India to cash in on the stock exchange, the booming stock exchanges. So they are creating businesses for India specific problems, benefiting Indians, and unique problems getting solved by youngsters driven by a sense of winning for Bharat, and uh, creating for Bharat, which means beyond the top 10 crore people and including tier 2 and tier 3. And uh, so India emerging as the third largest economy, which will be in the next 2 3 years, in spite of heavy geopolitical headwinds and pushback from the Western economies. That excites me quite a lot, and I think $10 trillion GDP is in sight. And although globalization and free trade is now off the table for most of the countries, but I believe in my prime minister, and I think Modi ji is firing on all cylinders almost since 12 years, and I'm very optimistic and very hopeful for it.
Perfect, perfect. And now it's the dream vision was that made in India for the world, and I it seems that that vision is slowly getting shape and getting fulfilled also.
it is getting fulfilled. You can see it, all the apps which you are using, whether it is calling a maid in 10 minutes, or it is quick commerce, or it is Sasta Saman at Meesho, and all were created by Indians for Indians, and it has been a big success story for India.
So, to conclude, thank you, Kunal, for joining us on the episode of To the Point. I hope you found today's conversation as insightful and inspiring as I did. A big thank you to our guests for sharing their journey, experience, and valuable perspective. If you enjoyed this episode, do follow the series and share it with colleagues, friends, or anyone who might benefit from this discussion. I am Lalit Mathur, and I look forward to bringing you more conversation with leaders who are shaping the future of business as finance. See you in the next episode. Until then, let us keep it to the point. Thanks, Kunal. Thanks.